Alright, what's up guys? Cousin T here with a quick weekly recap. It's Friday the 26th of August, another week in the books, and today was a little bit of a doozy. The market getting pimp smacked here today. So, give you guys a quick update on the sheet. I know you like seeing the spreadsheet, so here's where we're tracking all the trades that we've done in my mastery since we launched the Big 3 indicator back in July. And remember, I'm risking 5% per trade, so if we focus on percentages, because that's what matters, for the month of July we were up 9%, and so far here in August we are up 11%. So the good news is we had a couple of good trades this week. We got rid of our Exxon Mobil calls for a 50% return, and then we flipped out the Freeport calls for a 50% return as well. The even better news, we didn't give back any of those profits on that big ass flush here today. So for the last handful of weeks here, I've had the stance of, price action, structure, and the signals all kind of points towards path of least resistance being to the upside. And obviously, that thought process served us pretty well. But that's all based on structure, right? Not based on the Fed, not based on CNBC, not based on Mr. Kramer. Good old price action, guys. So, with today's flush, now the price action, the signals and the structure all kind of suggest we're going to show up here early next week and we're looking to short the bounce. So remember from last Sunday's video, and as always I'll hit you up with another watch list video on Sunday, but remember from last weekend's video, I kind of gave you guys a scorecard, right? Points for the bulls and points for the bears. Coming into the week, the points for the bulls were pretty much just support above your key moving averages. So we came into the week and the S&Ps were above that daily, weekly, and the monthly 21 EMA. And obviously here today we are under the daily 21 in a pretty big fashion. We are under the weekly 21, and we are under the monthly 21. So as far as the bulls here, they kind of dropped the ball. And then coming into the week for the bears, they had the dollar, the dirty Dixie, working in their favor, and the dollar still looks great. Daily squeeze fires to the upside this week. We've got Big 3 on the daily and the 4-hour chart. This still looks poised to break the highs here. And of course today, pre-Powell, pre-JP and the boys, live from Jackson's Hole, we got a little bit of a flush here in the dollar. But all said and done, she popped. So the dollar looks poised to break out. No bueno for your bullskis. And then HYG, the junk bonds. They tried to rally yesterday, or they did rally yesterday rather. But today you get the huge rejection. You take out support. You've got bearish Big 3 on the 1 hour, 30 minute, all the way down to the 5 minute. HYG looking pretty ugly here. That still works in the favor of the bears. And then last but not least is the VIX. Of course, a pretty big pop here for VIX today. So if you're bullish on the market, ideally you want to see VIX under 22. Today's pop might be a bit of a potential warning sign. And then, of course, guys, the Big 3 signals now, they've gone bearish. And that's pretty much across the board. So quick run through it here. And we're looking at the Big 3 labels on this chart. For the S&Ps, right, and mind you, under the daily 21. 30-minute, 15-minute, 5-minute, bearish Big 3. For the Q-tips here, which I would love to short next week, 30-minute, 15-minute, 5-minute for XLK, 30, 15, 5 for the semiconductors, 30, 15, 5. A couple different stocks here, like Amazon, right, under the 21. Lower time frame sell signals. That sets up to short the bounce. What about Google? The big Googski. Google got fucking whacked today. Excuse the French. Google got hit today. Man. I got a soft spot for Google. So when you look up and see that, minus 5%, it gets a couple curses out of you. But I mean, Google rather just gets pummeled here today. 1 hour, 30-minute, 15-minute, 5-minute sell signals. So, here's how I look at it. All the trades from that spreadsheet, they were all bullish trades. So we're buying calls and we're selling puts, but we're taking those trades to the upside because they fit the bullish criteria, right? And in essence, what's that bullish criteria? We are looking for things trading above that daily 21 EMA, and then we're looking for buy signals on lower time frames with our big 3 indicator. Right, so every single one of those trades, exactly the same. So ExxonMobil, we're getting long near that 21. We're taking profits at +2. It's the same exact trade as a trade that we had in Freeport. Freeport, we got long, I think, on Tuesday. Daily squeeze above your 21. At the time, we had some buy signals, and we're taking profits at +2. Right, so every bullish trade is exactly the same. So with that being said, if that's the criteria, the labels over here have to be green, and we have to have price action above the mean. That I rhymed a little bit, huh? But if that's the case, then by default, I'm done getting long the S&Ps. By default, I'm not looking to get long NVIDIA. I can't get long Amazon. I can't get long Google. So we'll talk a little bit more about what we could get long in Sunday's video, but as a bit of a sneak peek, it would have to be energy. Energy and maybe some natty gas. We got some natural gas calls in our options room. But pretty much here, guys, getting long over the last month or so worked really well. But it only worked really well because the structure and the signals, they were all cleared for more upside. Now here's where we're at. Now we're quickly seeing basically the opposite setup. So if we look at the inverse chart here of the S&Ps, so for those of you on ThinkorSwim, if you put minus SPY, that'll take the current chart of the S&Ps and flip that bad boy upside down. So here's what's interesting. If you look at a few inverse charts after today, the inverse charts actually set up our bullish trade. Meaning on the inverse chart, the S&P is above that 21, and our 30-minute, 15-minute, 5-minute is bullish. As long as that's the case, I look for a little bit of a dip here. Try to get a better entry, but I would look for a dip. I'd look to buy some calls. I would look for a push towards the upside. What about the inverse chart of NVIDIA? I mean, that looks good. Bullish daily squeeze. Bunch of buy signals. I'd buy the next dip. The QQQ, of course, on the inverse chart. We got buy signals. We're above that 21. Yeah, I'd look to buy the next dip. So with that being said, if I would buy the dip on the inverse chart, probably means I'm going to short the bounce on the real chart. So what I'm seeing right now is basically the opposite of our bullish trade. Now it all starts to fit that bearish criteria. We're under 21 EMAs, monthly, weekly, daily, and we got some sell signals. So that's how quick the market can change. And sometimes in the comments, and for what it's worth, guys, if you leave a dumbass comment, I delete it. And if you see the market differently than I do, then leave a comment. Right? I love talking to other traders. I love getting other opinions. If you go to the comment section to defend your idea, just basically talking shit, we don't got no room for that negativity in these comment sections. So a few weeks ago, and it's YouTube, right? So a lot of the titles are meant to catch your attention. But for those of you that watch your videos, we always discuss both potential outcomes. Right? We could rally, we could break down, but nonetheless, back here, when I was giving you guys the advice to maybe start to think a bit more bullish, I'm getting comments where people just basically defending their bearish outlook. You're going to be crying, you're going to feel the pain, I'm laughing at you. Well, we laughed to the bank, all the way to the bank for a few weeks here. Right? It's just based on the structure. But a really important lesson that you learn over time as a trader is you can be in a position where, based on the things that you're seeing, you're waking up every day looking to get long, and then one morning you wake up, everything changes. You have to be able to flip your game plan immediately. Right? You can never marry your idea as a trader. So today's one of those days where I would be a fool to look at this chart and still give you the advice of buying the dip. Nothing lines up. No structure, no buy signals. So now I switch to giving you guys the advice. As long as we're under that daily 21 EMA, as long as those big three signals are bearish, look to short the next pop. And I think we should, keyword should, get a little bit of a bounce here, maybe sometime early next week. If we could rally a little bit on Monday, I think that would be a total gift. The reason I say we should look for a pop, today's flush was so nasty. We are now a good, let's just call it 2% under the hourly 21. Alright, so mind you, even if we are going to continue to trend in one direction, when we get a little bit too far above that hourly 21, you got to get the reversion to the mean. So even if we're going to trend to the upside, we get a little bit too cooked, you get your back test. As long as you hold support, then you buy the dip, you get your push. So on the short side, I think any bounce towards that 410, 412, as long as we're under the hourly 21, I think we're putting on some shorts here. And the initial target would be 400. So if we rally a bit next week, I'm going to buy some. I might buy some 400 puts. I don't have the money too often, but I do think on the put side, you do take advantage of a little bit of that implied volatility. So for now, that's the initial game plan. Short the bounce until proven wrong. And we might be seeing a, the stage might be set here after Pavel's comments today for the market to generally trend lower all the way into the next Fed meeting in September. Right. I was of the thought process, if structure holds, we might be able to rally into the Fed meeting. Well, guess what? Structure didn't hold, at least as of now, and based on the signals here, we're thinking short the bounce. Maybe all the way up into September. But of course, guys, we could gap up Monday morning. There could be a bunch of buy signals, and guess what? Then I'm looking to get long. So, as always, make sure you leave those opinions at the door. Focus on the chart in front of you. But as far as, before I let you go here, two things. One, before I give you the watch list video on Sunday, do your scans, do your prep work. I don't so much need any bearish ideas. I think we all got a sense of what we could short. The SPY or QQQ kind of covers all your bases. If you've got anything on your list that you think would fit some of my bullish criteria, throw that at me in the comment section, either in this video or in the Sunday watch list video. All right, and I'll give you guys a few spots here. One being energy. And we're up here at 2 ATR, so we got to buy the dip. But check out the weekly squeeze. Now, for what it's worth, if the market really gets clobbered here, maybe even energy doesn't work to the upside. So we'll find out. But for now, great looking weekly squeeze there. So I think your Exxon Mobil's, that's a pretty weekly squeeze. I think your Oxy's, that's weekly chart porn. That is some weekly chart porn. Be careful pulling up this chart when you're at work. I wouldn't want to see any of you getting written up for indecent weekly squeeze exposure. This is super clean. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 weeks in a row. You hold perfect support in your 21 after a monster rally. $23 to 70? What the hell is that? That's huge. So I think eventually we might be able to get the breakout here. So I think the weekly squeezes in energy could pack a punch. And then one more name I wanted to show you here, guys, if I can remember the ticker. I'll cover on Sunday. It came up in the scan results today, and Sam from the options room, he called this one out to me. I think it's Scorpion. Let me see if I can find it. S-C-O-R-P. There we go, STNG. So if you have anything that looks like this, trending to the upside, squeezes above the 21 EMA, throw that at me here in the comment section of this video or the Sunday video. I'm interested to see what you guys have got. I think I got a pretty good grasp of what we could short right now. Everything outside of energy. So let me know what you got, and then last thing here, especially for your newer traders, but a good reminder I think for for all of us. There's nothing wrong with coming into a session, sitting in cash, right? No open positions, and in absolutely no rush to put any cash to work. And I think going into a Fed announcement, I think going into like major earnings, major economic reports, it might be worth consideration. So in the event you found yourself, with a lot of stress today, you're taking a pretty big hit, you're losing some profits, you're losing some peace of mind. Did anyone know we were going to flush today? I mean, I can promise you there's going to be a few people who will claim they knew. But as a general statement, we didn't really know exactly what's going to happen the following day. And we'll be going to these moments of uncertainty like a Fed day when they're playing around with Jackson's Hole. Things can be a little bit wild. Today being Exhibit A. So food for thought. It's okay to go to cash. It's okay to take your dog for a walk and come back later. Right? Basically, come back when you have clarity. So that's something I've learned the hard way over time as a trader. I wanted to buy AMD yesterday, but I didn't buy AMD because it didn't fit my criteria. And then I avoided catching a 6% dip on the chin. We've been looking to buy NVIDIA, but we never bought it because it never fit the bill. Even more important to keep that in mind when you're heading into something like the Fed announcement. But there you have it, guys. Quick recap. I, for one, am thinking short here, but I will say it's been an enjoyable handful of weeks here playing the market to the upside. It felt like the good old times. So we will see what next week brings. I'll hit you guys on Sunday with your watch list video. And as always, I invite you to come check out the Mastery. We got the 30-day trial going for $7 right now. So if I can do my job, which is cranking out trades like this, pretty confident you'll make back your $7 investment. So I appreciate you guys. If you haven't already, do me a favor, hit the subscribe button. Leave a comment down below. You can comment anything. Your favorite color, your favorite car. Actually, let me know your favorite car, your dream car. And then I'll comment back and let you know my favorite car. But alright guys, be good. Talk to you on Sunday. I'll see you soon.